Good evening, guys. How's everyone doing this evening? If you can hear me, just give me a yes in the chat box. If you can hear me, please give me a yes in the chat box. Wonderful, wonderful. Good evening, LaShawn. Good evening, Steve. Good evening, everyone. I assume everyone else can hear me. All right. So this evening, we'll be doing order blocks within the Elliott wave theory. Now, or you can say that it's the Elliott wave theory within the order blocks. Okay, so let's jump right to our charts. All right. So you guys can see here that I have my MT4 up. I have a chart that is on our screen. And as you guys know, I like when you let me know what chart you'd like to look at. I would prefer that we look at a chart between the US and European sessions. So for example, there is Euro USD, which is in Euro and US. We have Pound USD, which is London US, which is kind of like Euro US as well. They're basically in the same sessions. We have CAD USD, we have Euro CAD, we have pairs like that. So choose a pair, okay, Pound USD, I'm already on Pound USD. So since you suggested Pound USD, we'll stay with Pound USD, all right? So I'm just gonna pull my chart back, okay? I'm just gonna pull my chart back. I'm just gonna pull it back. Okay, this one has some markups on it. I'm gonna close this one out. Okay, so I'm gonna close it out and I'm gonna open a fresh one. Okay, and I'm gonna open up a fresh Pound USD chart. Load up my template. Okay, I'll take off. Let's go to an indicators list and I'm gonna take off the RSI. Take off the zigzag. Okay, all right, and there we go. Have a nice clean chart. I'm going to adjust the scaling. And I'm going to pull this back. Okay. Just going to pull it back to a random time. All right. Nothing special, just a random time. And I'm going to stop here. Okay. What date are we on? We are at approximately September 3rd. Okay. So let's work from here. So who knows what an order block is? Who knows what an order block is? Does any one of you know what an order block is? Okay, okay. Okay, I see someone says a block of orders in a specific area of price action. Someone says when the market maker buy or sell. Okay, okay. You guys have a pretty good idea, okay? Technically, what an order block looks like is, since price is moving up, the last up candle before a move down. So this would be an order block. I'm just gonna pull it all the way. Try to get it as tight as possible. I think I got it here. So that is an order block, okay? The last up candle that came before the move down. So we have price moving up. Here's another order block. Last up candle, it's over here. Last up candle before the move down. That's another order block, right? Right there. I'm trying to get it as nice as possible for you. I think, okay, it's close enough. I'm gonna have to, let's try from this end. Okay, got it. Good. So last up candle before the move down. Last up candle before the move down. When the price is moving up, we have the last up candle before the move down, and that would be an order block. Okay. If the price is going down, as you can see here, it's going down, we're going to look at the last down candle before the move up. In this case, the move up is going to be a pullback or a retracement. Okay. So this would be the last down candle over here before the move up. And that would be an order block right there. Okay, and you can see how the price comes back and respects that area or those areas. Here you can see when the price came back to this area, you can see that there was a little bit of a bounce off it. Okay, so let's focus on the order blocks to the upside first. So we have price moving up. We have the last up candle. In real time, it looks sort of like this. Okay, so this is the last up candle, all right? Price starts to pull back. If price pulls down and retraces to that area, you're going to expect a bounce off it. Okay, and as you can see, it does bounce. Now it pulls up, it breaks through it. Once the price comes above the order block, then we can expect price to retest the order block and then push up some more. Okay, here you can see the day came to an end, the price pulls down, this becomes the order block, price pushes down. Normally it would push down to the previous order block. So here you can see it pushes down to the previous order block. This is the area if you sold, you'd want to be taking profits, or if you're looking to get into the market to go long, you'd be looking for a reason to go long at this order block. Okay, so price pushes down, it goes below the order block. Goes below the order block. Once the price goes below the order block, you're going to be looking for a reason to take another short because the price is going to be looking to come back, retest this order block, push down again. It came back, there is a retest, there isn't much of a push down, and then eventually it breaks through the order block, closes above. Okay, price closes above the order block, you're going to be expecting price to move up to the next order block. However, in this case, you can see the price did not move to the next order block. Instead, it came down and closed below the order block. Once the price is below the order block, you're going to be expecting price to continue lower. The price is going to retest. As you can see here, it retests the order block and pushes down aggressively. Okay. Now, how are we going to use the Elliott wave theory within these order block situations? Okay, so a lot of us are familiar with the Elliott wave theory by now. It's where we have a 5-wave impulse and a 3-wave corrective move. Okay, so it's good to try to find out where the impulse is coming from. Okay, so if I just compress this chart a bit, right? I can look at this and say that this is the impulse I'm looking at. I'm on the 1-hour time frame, by the way. So I'm on the 1-hour time frame, and I can look at this and say, okay, this is my potential impulse because this is where the price is pumping to the upside. It's pumping to the upside. It's moving aggressively. Okay. With the price moving aggressively to the upside, when price pulls back, I'm going to look at that as my retracement. Okay. Now, according to the Elliott wave theory, a retracement is a 3-wave pullback. Okay, with us getting a 3-wave pullback, or it's also referred to as a corrective move, with us getting a 3-wave corrective move, we could look at this here as wave 1. This is wave 1, this is wave 2, and you can see this is 1, 2, 3. So this is a corrective move, right? We have 1, 2, and 3. Everyone can see that is a clear 3-wave formation. Okay. With us getting a 3-wave formation, it's basically telling us that the corrective move may have come to an end. Okay. With that corrective move coming to an end, we're going to expect another wave like this, another corrective impulsive wave to push to the downside. Now, here you can see that we're getting that corrective impulsive wave pushing to the downside. However, with us getting this corrective impulsive wave pushing to the downside, you can see when price comes below the order block, it pushes up and retests the order block. With us getting the retest of the order block, that's where we can look to go short. Okay, so this would be a nice entry. And those of you who were present at some of my other classes, you may understand what these yellow, pink, and blue lines are. These are vertical lines on my chart. These are basically what I call time slots, right? So this is the 2 a.m. market open, European market open. This is the lunchtime, which is 5 a.m. And this is the open of the US market, which I have here is 8 a.m. Eastern Standard. Okay, so I'm going to be looking for my entries inside of these time slots. And why am I looking for my entries inside of these time slots? Because that is where the majority of the volatility comes from. The volatility comes into the market between 2 a.m. Eastern Standard and 9 a.m. Eastern Standard. Okay, so I'm not looking for any entries anywhere else. I'm only looking for entries within 2 a.m. Eastern Standard and 9 a.m. Eastern Standard. Okay, because I know that the volatility is going to be coming into the market anywhere inside of that time slot. Okay, so if I'm looking at Elliott waves, as you can see here, we get the move down, we have the move up, 1, 2, 3. This order block, price goes above it, comes back below it, and retest inside of this time slot. Now, as I said, this is the area in terms of time when I'm looking to get involved in my trades. So once I see the price come back and retest this order block, closes below, this gives me a nice indication that the price may want to continue lower, continuing this corrective impulsive move. Okay, once I get my entry, price hits the order block, comes back, closes below, and I go short, I'm going to be using market geometry, which, as you guys know, I just measured the length of the move, the previous move, right? And I would simply just project that. And this is where I'm expecting the price to come to around this level, okay? So with me expecting the price to come down to around this level, this would be where my profit target would be. All right. Now we could also look at previous order blocks. Okay. Now a previous order block would be the last up candle before the move down. So here we have an order block. Right here. Just trying to get it nice and as neat as possible for you. So here we have an order block, right? So the price came straight into another order block, and that's where it stopped and stalled out for the day. Okay, so this is the area where we want to make sure that we set our profit targets, which is going to be back at another order block. But we have so many different techniques in the market that we can use to basically set our entries, set our stops, and order blocks is one of those techniques that we can use. It's also a very effective way of, setting your entries, setting your exits. So it is something that we can look at within the Elliott wave theory as well. The Elliott wave theory could give us a very good idea as to if the price is expected to come to that order block. It doesn't necessarily mean that the price is going to get there within one day. It could take a while longer. For example, if the price had come down, retested this order block, given us our sell signal, let's say we took the sell signal, but instead of the price continuing down right away, it just went sideways, for a while. Eventually, it would maybe retest the order block again and come down to around this level. Okay, so we got to at least also have a good idea of what price action looks like, how the price actually moves. Because if you look at this wave, this first impulsive corrective wave here, you can see that it's pretty weak. It's pretty weak, especially this area right here, right? This entire area here is actually a B wave. I don't know if you guys can see it well. Let me just try to make this a little bigger. As you guys can see, this is more of a B wave. If you're familiar with the Elliott wave theory, you could try to construct this wave and you will notice that this is a B wave. So this is the impulse. This is the corrective wave inside here. This is the next impulsive wave. And this is a 3 wave formation. Okay, so a lot of us by now should understand with the Elliott wave theory, we can have alternating waves where you have one wave being 3, the next wave being 5 in terms of the impulse, the impulsive side of the corrective formation. So we need to be a little bit careful when we look at these waves. We need to keep all of these different structures in mind, you know, what these waves can potentially look like. And we can use market geometry, which is another technique that I've taught on as well. I'm sure you guys can find that in your vault, your previously recorded classes. So we can use a range of these techniques to determine where our entries should be, where our exits should be, where our stops should be set. So for example, if I am looking to enter here, my stop would be above this high, right? Because this order block should be blocking the price from going back to the upside. So my stop should be safe right above this high, right here. Okay, I don't have to put my stop all the way up here. All right. If I came back and we retested this order block, then my stop could be above the order block. But we did not reach that order block. Price came up, went back down, retested, closed below. That's my signal to go short. Go short, I'm going short for this distance from the high. And as you can see, the price came down to that distance. I would have been able to exit my trade, be done with it. At that distance, we also had an order block. Okay, now the order block is basically where the market makers are accumulating buyers or sellers. Okay, so for example, this last move up that was made, this was their attempt to accumulate buyers. Okay, so they accumulated buyers in this area and then they pushed the price down. Okay, so by accumulating these buyers and pushing the price down, they're able to start stopping them out. And whilst they're stopping out those buyers, they're accumulating sellers. Okay, because everyone starts to jump into the market. They're saying it's going down, and everyone's coming in, everyone's starting to sell. And with them jumping into the market and selling, as you can see, they push the market up again. They're accumulating more buyers, and then they push it down again. So they're now going to stop those buyers out again. Okay, so they're going to stop those buyers out, start pushing the market up again, accumulate more buyers, stop those buyers out again, and now they're going to start pushing the market up again. Okay, now when do we actually start buying? We would want to start buying when price goes above the previous order block. So if price goes above the last order block and closes above and comes back and retests that order block, that's when I'm going to be excited to look towards the long side. But I need to also keep in mind the Elliott wave theory. Now, if this was my impulse to the upside, and this move down is my corrective move, as you can see here, this is my corrective move. When am I expecting this move down to end? According to the Elliott wave theory, we can look at this and say this is 1, this is 2, this is 3, and this could be W, X, Y, and this could be X, and this could be Z. Okay, so we have W, X, Y, X, Z. This is a more of a complex corrective formation. We have 5 waves down in a corrective formation, but it's a corrective cycle. Okay, now I get my move down. I'm looking at this order block here. Price starts to go up. If I'm going to set my last order block, which is the last down candle, this would be it. This would be my last order block. You can see here that the day would have came to an end. Price came back, retested this order block. This is the open of the European session right here. You can see that at the open of the European session, we have price retesting the order block. It didn't quite close above. In this case, you can see that they wicked above. The candle closed inside the order block. I would have waited for some sort of confirmation. Then I got this green candle closing above the order block. Okay, With me getting this green candle coming back and closing above the order block, I already have a retest of the order block. Okay, I already have a retest of the order block. Now I'm looking for my entry. I got this green candle closing above the order block. If I jumped in to go long, I'll be going long to the next order block. Okay, the next order block that I'm looking at is this order block that you can see here, right? This order block, or I can look at, let me just try to use a different color. Okay, I'm going to try to use a different color here. Let's try to use a different color. Let's use this one, blue, right? I can look at that order block, and as the price is moving up, it hits that order block. Once the price hits the order block, closes below the order block, I can say, okay, I'm going to exit my trade because price hits the order block to the upside. It closed. I'm exiting. It closed below the order block. I'm going to exit. If the price closed above the order block, then that would give me it would convince me that the price may be looking to continue heading higher, maybe to the next order block. Okay, so here it closed below, pulled back, it came back, closed above. But once I closed my trade here, I'm not going to look to re-enter. I'm just going to be done with it because it hit the order block, it closed below. That's a signal to me that price could pull back. So I'm just going to exit and I'm going to be done with that setup. Okay. However, price pulled back, pushed up, closed above the order block. Once the price closes above the order block, right? Once it closes above the order block, I'm going to be looking long for the next day. Okay, so the next day, I'm going to be looking to go long. I'm not going to be interested in going short anymore. Now let's move forward. Let's see what the next day looks like. So we got the retest here. Price, let me just try to push this order block out into the future. All right, so as you can see here, we got the retest here and the price moved up. This is moving up in the Asian session, okay? So this is not where we trade. We don't trade in the Asian session. We're gonna leave that alone, let it do its thing. And you can see here that the price continue moving up in the European session. It did pull back. It did not retest this order block. However, it retested a previous order block, which is this one. Right? So it retested that order block. Let me just push that out. Good. So you can see here that the price did pull back. It retested this order block. Now these order blocks are very close to each other. So these are order blocks that you can look at, and you can look at this and say that this is a potential cluster of order blocks, which means that zone could be a very strong area, right? So with the price retesting that order block, I can look to go long. Okay, I can look to go long. Once the price pulls back, retest, closes above, I can enter, I can go long to the next order block. And as you can see, the next order block is this one. Okay, price goes up, hits the next order block, I'm out of my trade. Let me just extend this order block to the future. There you go. You can see price came, hit the order block. Once it hits the order block, I'm out. Okay, it hits the order block, it comes back and closes below the order block. Once it closes below the order block, it's telling me something. It's telling me that potentially the price could want to go down. Now, look at this. We have 1, 2, 3, 4. This is 5. Okay. This is what we look at, and we call this an impulsive wave to the upside. Now, it doesn't have to be a perfect impulsive wave. It could be an impulsive corrective wave. Okay. So we could look at this and say that this is a 5-wave move, and we can say that it's an impulsive corrective cycle. Okay. Now, we have this move down. which is corrective. We have this move up, which looks more impulsive because we have nice clean waves, as you can see here, nice clean waves to the upside. And we have a three-wave correction. We have 1, 2, 3. Okay. With us getting this three-wave correction, we can say that we can expect price to continue moving down, or we can expect price to start moving back to the upside. Now, since price came back to the order block, it did come and close below. Okay, as you can see here, it did come close below. And this is the beginning of the European session, and we did come and close below, and it did pull back. And as you can see here, it retested and closed below again. In a case like that, I'd be looking to go short because I'd be thinking that there is a possibility that the price may want to continue pushing down. Now, that's if I'm just looking at order blocks. But if I'm paying attention to the Elliott wave theory, then I need to see a complete structure. I need to see a complete corrective wave, okay, for me to look short, not just a retest of the order block and close below the order block. I want to see a complete wave structure. So here you can see that we don't have a complete wave structure. The price just continues moving up, right? So the price continues moving up. So this is one wave up. It pulls down over here. You can see that is just maybe one wave of a corrective wave. So it pulls down, we get one, pushes up, we get one, we get 1, 2, 3 in here. Look, 1, 2, 3, and it pushes up again. Okay, so with price closing above the order block, now we have price closing above the order block. And on the next day in the European session, you can see that the price did pull back, did bounce off the order block, did close above the order block. Once we have a close above the order block, we can go long to the next order block. And with us going long to the next order block, why are we doing that if we're looking within the Elliott wave theory? It's because we have an impulsive wave up, we have a corrective move, and we have another impulsive move to the upside. That's what we will be expecting, right? So I'm expecting another impulse. We did bounce off the order block. We did close above the order block. So in that case, I'm going to jump in because I'm expecting an impulse to the upside, okay, which is a stronger move, okay? So with me getting that nice push to the upside, once I hit the order block, I'm going to be out of the trade. Now, as I showed you guys before, we can use market geometry. Look at that. So this area is a nice area that we can look at, okay? So measured from the low, extended into the high. And once we set our profit target in that area, you can see the price comes up, it hits the order block. If it comes very close to my profit target, I'm just gonna close the trade if it doesn't meet my profit target, okay? Because it hit the order block. Once it hits the order block, I'm looking for my exit. If it comes close to my profit target, I'm just gonna close out the trade, okay? Because it already hits the order block, okay? Now, bear in mind that we have truncated waves, we have extended waves. So all of these we need to keep in mind. If I'm going to have an extended wave, what's going to let me know that I can potentially have an extended wave is if this wave did not close inside the order block or below the order block. If it just blasted through the order block and closed above it, then I could be thinking that, hey, I could be having an extended wave to the upside, because if the price closes above and retests the order block, it could continue moving up, all right? However, in this move up, that didn't happen. What we got was a move up to the order block. I would have closed out my trade. It pulled back. As you can see, it pulled back in 3 waves, 1, 2, 3. I didn't quite get a retest of the previous order block, but it continued moving up for one more wave, okay? With me getting this one more wave up, I would not be in that trade because this is the one that I would have taken. I would not have gotten into this one, okay? Because I did not get a retest of the order block and close above after getting a complete 3-wave structure, okay? I would have missed this one. because I did not get the retest of the order block. So I would have missed this move up. And what I would be doing after this move up is waiting for price to stay above the order block, come back and retest it before I look to take another long. Okay. However, what happened was we have a red candle, a short candle, back into the order block, another one closing below the order block. So now I'm looking bearish because I'm going to be expecting price to pull back and retest the order block. Okay. So if the price does not pull back and retest the order block, I'm not looking to go short just yet. I'm just going to leave it alone. Okay. So you can see price comes down to the order block, bounces off it. Let's see the time. All right. So eventually the day came to an end. So this is around 12 p.m. Eastern Standard, 1900 hours. This is about 12 p.m. Eastern Standard GMT2. So this would have been around the end of the day for me. If I did not close off my day at 12 p.m. Eastern Standard, I'll be closing off my day at 4 p.m. Eastern Standard, right? So 2300 hours. Okay, that's about 4 p.m. Eastern Standard, GMT2. It's going to be 2300 hours, right? So around this time, the day would have definitely came to an end. And what I would be looking for is price to come back and retest the previous order block for me to go short. Okay, as you can see, we got a low, we have price pushing up. It did push up nicely, but we only have one wave to the upside. So this is one strong wave to the upside. This is not a complete corrective cycle based on the Elliott wave theory. So I would not be looking to just jump in and go short once price comes and bounces off this area. Okay, so we have one wave up, we have a pullback, another wave up. We closed above the order block. Because we closed above the order blocks, I would be looking for price to come back and retest the order blocks for a continued move up. Okay, price pulled back, retested. However, we still can't go long yet because we need to have at least a complete structure. Okay, so with us getting these three waves up, we got this pullback. It's aggressive. We got another pullback to the upside. We're going to look for one more wave down. So now we have 1, 2, 3. It came back, retested the order block. It closed below the order block. Because it closed below the order block, it's telling me that the price may actually be bearish and not bullish anymore. Okay, so with price closing below the order block, I'm going to look for price to come back and retest the order block. Okay, with the price pulling back, retesting the order block, I'm going to be looking to go short. Okay, and if I'm looking to go short, I'm not looking to just go short just on the retest. Okay, I'm looking for some sort of structure. I need to see some sort of consolidation, some sort of proper retracement. Okay, and according to the Elliott wave theory, we're going to be looking for at least a three-wave structure. So if you look at this carefully, you can see aggressive move up, pull back, another aggressive move up. So that's a three-wave structure. Okay, with us getting the three-wave structure and price hitting the order blocks, we didn't close above the order blocks. This red candle came back, closed below. We already have a three-wave structure here. With me getting a close below, I can go short. Okay, because the order block rejected the price. Now price is looking to go down. I can go short. And as you can see, I would have been able to make some profit. Okay, now we can set up a whole lot of order blocks as we go along, but the main order blocks that we need are the highest order blocks. As you can see here, this is the highest order block that we have. And this is basically the lowest order block that we have and the ones in between, right? So once we have these order blocks, we can watch and see how price plays out within these order blocks, because generally what's going to happen is you're going to find these areas of consolidation inside of those order blocks. Okay, so there are going to be other order blocks that fall inside of the main order blocks that we did set up. So we don't necessarily have to pay attention to those unless the price bounces off, goes up, creates a new order block. Okay, then we can put that new order block on your chart. So for example, here, price moved down. This is basically, let me just extend this. Let's see if it's going to be respecting this order block. As you can see, it came back to that order block. This is the lowest order block. Price came back to it. As you can see here, came back to it. Once it hits the order block, you're out of your trade. You're going to get price bouncing off that. As you can see, it stays above the order block. We did build a corrective structure. You can see here, this is 1, this is 2, this is 3. We didn't retest. Okay, we don't have a retest here. We came sort of close, but we didn't quite get a retest. However, if we're to take into consideration the smaller order blocks that came before, for example, like this one, this is the last down candle before the move up. This is an order block as well. All right, I think I got that. Good. So you can see this is an order block as well. And you can see price closed above, but came back below at 2 a.m. Eastern Standard. It did close below the order block, pushed back. This is basically a retest because it pushed back, pushed up above, came back, this pretty much closed below or basically inside the order block. That could be a nice signal to go short as well. Okay, or you can wait for a proper close below, like this red candle over here. So once you get this red candle over here, you can look to go short. Your stop goes above that high, which is above the order block. And you can see here that price rejects that order block again and continues pushing to the downside. Okay, so using the Elliott wave theory with your order blocks, it will help you a great deal in understanding when you should enter a trade. Okay. Any questions, anyone? Any questions? Feel free, drop your questions in the chat box. Just giving you guys a few seconds to put your questions together. Grace, what about you? I know you're normally one to have a lot of questions. No questions this evening? Jennifer, what about you? Grace says no questions. I see we have Sandrika. What about you? I remember your name. We have Reginald here as well. What about you, Reginald? You guys normally ask a lot of questions. Don't say I'm picking on you, okay? Okay, Jennifer says, do we have an Elliott wave indicator that shows the waves? Okay, at Unit of Prosperity, there is an Elliott wave indicator. So yes, so there is an Elliott wave indicator with UOP. You can try using that indicator as well. It's going to give you potential wave completions. Okay, so with order blocks, you're simply just looking for a turn in the market, correct? And it consists of 2 candles. Then you draw the zone or order block out to the right. Okay, so You can look at it as two candles. If the price is moving to the upside, you're going to look for the last up candle followed by a down candle. Okay, so the last up candle would create the order block. Okay, so if I'm looking at this, right, this is this wave up here, right? Let me just remove, let me just try to remove this. All right, I'm just going to try to remove as many of them as possible. Right? So if I'm looking at this section and this is the last up move, and I'm going to have to look at this as the order block. This entire move here is the order block. Okay, hold on. I believe this is it. This is the order block right here. So this is the last up candle before the down move. So this is the order block of the day. Okay. So with me getting that, price came down, closed below. With me getting a close below the order block, I'm waiting for price to come back and retest it. When the price comes back and retests the order block, I'm going to look to see how it retested the order block. Did it go 1, 2, 3 to the order block? If it did that, I'm satisfied. I'm going to look for a reason to go short. Price hit the order block, bounced off the order block, closed below the order block. I'm going to go short. My stop can go above the order block or above the high, the candle that created the high of the order block. It can go above that high or basically just above the order block. So that's where my stop would go. My profit target would have to be set. What I like to do, as I showed you guys, I like using market geometry. So this move down, I'm going to measure that out. I'm going to take that length and I'm going to project it from the highest point, and I'm going to let that be my profit target down here. Let me just use a horizontal line. This is my profit target right here. Okay. Now, I'm more of a day trader. I'm not a swing trader. Now, swing traders would go for the profit target, right? They're going to hold it for 2-3 days if they need to, right? But I'm more of a day trader. So I'm looking to exit by the end of the day. So in some cases, I may not get to my profit target. In other cases, I may get to my profit target. Okay. So I'm going to be looking to get to my profit target. And I'm also going to be looking at maybe pulling the trigger if price hits an order block before the day comes to a close, right? So as you can see here, the price, it pushes up again, retests that order block, pushes down. Once it hits this order block, which is the last down candle before the move up, I can actually close my trade, right? So anywhere inside, let's see, where did it hit? Around here, I can close my trade. I'm not, let me see here, did it? Yes, price did hit this order block and closed above. So when I see this, price hits the order block, closed above, I can exit and I can see I'm done with it. Okay. However, the price continued pushing down and closed below the order block, right? But I'm already out of the trade because it hits this order block and I'm a day trader, right? So if I entered here, when is the day going to end? For me, it's already very close to the day coming to a close. This is actually a trade that I would not be too excited to enter because it's already around the close of the day. So I'm not really going to be excited to enter. If I entered on the close of this red bar, I'm probably going to have to exit by this red bar, which is going to be 12 p.m. Eastern Standard. The latest for me would be 2300 hours, which would be on this red bar over here. So by here, I'm going to have to exit my trade and I'm done for the day as a day trader, right? But a swing trader would be holding on to the trade. Okay, so a swing trader would be holding on to the trade. The stop would be above here, and they'd be holding on to the trade until they get to their profit target, which is down here, which could take a few days. So you enter on the 15th, you have the 16th, you haven't gotten to your profit target. You have the 17th, and you're going to hit your target on the 17th. right? So by the 17th, that's when you hit your profit target and you're done for the, you're done with that setup, okay, by the 17th. All right. Now, is there going to be an order block in this area, a previous order block? As you can see, there is a previous order block and it's right here. I'm just gonna, it's the last down candle before the move up. Just gonna outline that for you. And I'm just gonna project that into the future, okay? And there you go. And there you see, hits this order block, I'm out of the trade, okay? I'm looking for my distance, but I need to also consider once the order block is hit, I need to look for an exit, okay? So this red bar, once it closes, I should be done at that point because it's inside the order block. It closed inside the order block, it could just pull back. Once it gets inside the order block, closes, I should exit. If it hits the order block and closes, I should exit, okay? I would want to forget about my profit target in a case like that because we hit an order block, okay? Even over here, where it came and hit the order block, this would be a nice exit for me as well. So here it came, hit the order block, I exit. I'm going to look for a re-entry because I'm still looking to get down to this level. So I could look for a re-entry. So I could look for price to pull back, hit this order block. As you can see here, it pulled back, hit the order block. We got 1, we got 2, we got 3. This is a complete 3-wave structure. So I can look to enter short, okay? So I need price to close below this order block first, come back, retest this order block before I can look to enter short. So by this red bar here, which gives me a proper close below the order block, I can enter short. My stop can go above the order block and I can aim for the profit target that I wanted. However, when the price comes back to this order block, once it hits the order block and closes above or closes inside, I'm going to exit, okay? Because it could bounce off the order block again. It came close, it did not touch it. The next candle came down into the order block, closed inside the order block. In a situation like that, I want to exit, okay? So I could have taken two trades with this setup. Any questions? Okay, let me see here. Jennifer says, okay, thanks. Can you make your candles bigger? Okay, with me making the candles bigger, it kind of limits, you know, the view, okay? I just wanted to give you a view of the area that we were talking about. And I'm going to make it small again. Yeah, this way we can get to see more of the price action, okay? Okay, with this strategy, how many trades do you normally take in a day? You don't have to look for many trades in a day. It all depends on how you trade, what you look for. Are you a day trader? Are you a swing trader? It all depends on your style, okay? With me being a day trader, trading manually, I'm basically looking at maybe taking one entry on up here, okay? If I get stopped out, then I'm going to look for another setup. And in most cases, that setup may not come the same day. It may come the next day, okay? So as a day trader, you're looking at maybe one or two setups in a day on one pair. Okay, let me see here, some more comments. Yeah, I take one position at a time. I don't really like scaling in and scaling out. If I'm scaling in and out, it would have to depend on a retest of an order block, and I'm more of a 1 hour chart type of guy. Okay, I like trading on the 1 hour time frame. Okay, so if I see, for example, just look at how the chart is right now. If I entered around this area and I'm swinging, right, you can see the price comes back, it retests. If it pulls back and a retest and hits the order block, closes below, I can say, okay, I'm going to pull another sell in this area. So if I sell here again, I have a sell over here, I have another sell over here as a swing trader. Okay, because it pulls back, retest, closes below, and I have a complete structure. 1, 2, 3. Okay, so this could just be a retest, double top, or whatever you'd like to look at it as, and I enter again. Okay, going short, goes down, pulls back. I don't get a retest, so I can't enter here again. Pushes down. Okay, when it pushes down here, hits this order block, I can say I can exit. However, I have not made my distance yet, right? But it hit an order block. So I can say, okay, I'm going to get out here. Okay, and if I got out here, you can see it continues going down to the next order block. So if I scaled out one position here, or I get out, exit with both, in most cases, maybe I would scale out one because this down bar is very strong. So let's say I scale out one position, I leave the other one on, it hits the next order block, closes back above, I exit here for the next one. Okay, it pushes up. I know this is another order block over here. It comes back and retests that area. We got 1, we got 2, we got 3. That is a complete 3-wave corrective structure. With me getting a complete 3-wave corrective structure, what I can do is wait for the price to push down below the order block, come back, retest the order block. Once it comes back and retests the order block, I get a close below, I can look to enter short again because I have a complete corrective structure. So I enter short, my stop goes above, and I'm looking to make my distance, my measured move. Okay, price comes down, hits the next order block, closes inside the order block. It didn't close below, it closed back inside. Or if it closed above, I'm going to exit. So once it touches the order block and closes above, exit. If it closes inside the order block, I'm going to exit. Okay, I'm not going to wait for price to come to my measurement. I'm just going to exit. Okay, then I'm going to look for another setup and try to get to the measurement. In this case, it's already so close to the measurement, I'm just going to be done with the trade. Look for another setup. Okay, my next setup would be looking for price to come back and retest this order block. Okay, let's see, did that happen? Here it is. Price came back, eventually retested this order block. With the price coming back and retesting this order block, I have to look and see what type of structure it made. This is more of an impulsive wave to the upside, right? So we have one move up and I can expect 3 waves down, right? So if there's going to be one down, closed below, pulled back, this is going to be the B wave of that correction. So I can look to enter once I have a complete 3-wave structure here. This is 1, 2, 3. So that's a complete 3-wave structure. This one closed below, I can go short. If I go short, I'm going to look for this measurement, right? I'm going to look for that measurement. But I'm only looking to go short inside of the time slot, right? So the measurement would start from here, and you can see we have price. This one looks like it retested. So if it retested here, I can look to go short once we close back inside, go back below. Okay, so if I go short, this would be my measured move right around here. Okay, in this case, it was a bit longer of a move. So I could be looking at targeting my next order block as well. So there is an order block. Let's see, last down candle here. Right, as you can see here. So this is the next order block that we could look at, last down candle. And as you can see, price hit that order block. Once it hits that order block, closes above, I'm out. So if I'm looking at the measured move, once it makes the measured move, I'm out. And I prefer not to trade really in the corrective cycles of the market. I prefer to trade the corrective cycles of the market. Okay, so sorry, I prefer not to trade the corrective cycles of the market. I prefer to trade the impulsive sides of the market. So this would be the impulsive side, this strong move up, right? So I'll be waiting for the corrective cycle to end, and then I'm going to be looking for the strong move up, which is this 1, 2, 3 wave pullback, and I'm looking for the next move to the upside. So let's see. Here we got a move pushing up. However, it was not very strong. Okay, it wasn't very strong. It comes back to the order block, hits the order block, and eventually pushes down. Okay, so this could be more of a bigger 3-wave corrective cycle, or this could be 1, this is 2, this is 3, more of a truncated wave. Okay, and if this is a truncated wave, then we're going down. Okay, because it hits the order block and we're moving down. And over here, you can see there is a pullback, there is a retest. So we could have gone long around this area here. And as you can see, it comes, hits the next order block. Once it hits the order block and closes below, that's your signal to exit. Okay, so exit, go short. Okay, now at the time we exited, it's pretty much around the end of the day. So if we did go short as a day trader, around 12 p.m. Eastern Standard or 4 p.m. Eastern Standard, we're going to look to exit, and we're going to look to the next day. Okay, and the next day, what we'll be looking for is a retest of the order block. Now, we can look at this order block, or we can look at the last order block that was created, which is the last up candle, so of the day. So this would have been the last up candle of the day right here. So as you can see, the price came down, stayed inside here, stayed inside the order block, closed below the order block, and with us getting this closed below the order block, with us getting this type of truncated move here, this could be the beginning of the move down, right? We have a strong move down, sideways movement, strong candle pushing down, closing below the order block, coming back, retesting the order block here, closing below. With this close below, we could go short, right? Now, with us going short, we could target the next order block, which is here. Let's try to push that out. Right, so we could target the next order block. As you can see, price comes down, hits the order block, closes inside the order block, but the next candle pushes down. So we could either exit here, be done with the setup. If we held on to it to see if we're going to get a bounce, then you can see here that price continued moving down. So that's a trade that we could have held on to, look at the next order block, or we could use market geometry. So if I make this a bit smaller and I try to use my measured moves, we can say, okay, this is 1, 2, and 3, and this is a complete 3-wave structure. Then we could be looking at getting more of a bigger move like this, right? A bigger move. So we could be looking at something like this from here to the downside. And as you can see, we did get that. Okay, almost the exact distance, but it would have taken a while to get there. So that is more of a swing trading direction. If you're looking at a day trading direction, then you can just look at from order block to order block, or you can look at market geometry, looking at the shorter waves. Okay, but if you're looking at it from a swing trading point of view, then you may want to look at the longer waves. All right. Okay, guys. Well, this will bring us to the end of this evening's class. Let me just go through the rest of your questions. Let's see here. Okay. Okay, no more questions. All right. Oh, I see. So this same concept applies to all time frames, correct? Yes, the same concept applies to all time frames. Okay, guys, any other questions? I'll give you guys a few more seconds. All right, I assume you guys have no more questions. Okay, thank you so much, guys. It's been a pleasure having you yet again. I will see you guys on our next class. Bye-bye for now. Have yourselves a wonderful evening. Okay? Yes, this class is recorded and it will be made available to you. You're welcome, everyone. Bye-bye. See you next time.